Okay, this is a continuation to Introduction to Checklist, and then I'm going to go into the checklist. We're just kind of wrapping up some of the commentary. So I want to kind of go back to that and just kind of mention that capital at risk was about what it is here, 3.35% organically with a 289 risk reward ratio. We would have never known that was the actual risk reward ratio until we actually saw the top come in, right? And then at that point, you realize, like, wow, it's actually better than that. That's how volatile these alts can be. That's how much they can defy expectations. They can go all the way up to, in this case, 1,346% ROI organically in the midst of a true bull cycle, right? In this case, for sand, which was just an example we were doing. And so that's pretty neat that the volatility monitor was that effective on sand back then. It was based on the weekly volatility monitor. And we're kind of seeing a lot of similar, setups and potential situations to that as we speak with Bitcoin and others that are kind of flirting with the 1 week during this past month we've had of down pressure. This happens to be a nice macro chart of sand. Again, totally just an example. Could go to zero. Any project I talk about today could go to zero. So this is not at all an endorsement for any given project. Just kind of talking about trading and using statistics to your advantage. So with that being said, like I said, 3.35% organic. If you decided you wanted to 2x leverage along at that point, you'd be risking 8%. Make no mistake about it. You could easily lose 8%, but you have to ask yourself, am I interested or willing to lose 8% in that larger time frame using the weekly volatility monitor as my backstop, more or less, and knowing that it's possible for the risk reward ratios to expand into the hundreds, which is insane, even if you just took, $500 and you did that and you were willing to lose $50 or $100, right? That'd be 20%. So that's interesting when you play even with smaller numbers, because the reality is that's a 1,346% ROI. That means plus 1,300% ROI. When you 2x that, that's actually plus about 2,700% ROI. So it's even meaningful when somebody does that with $500, especially relative to the risk of losing, let's say, 7%. What is 7% of $500? Not quite $50. So count on losing about $50. And it's very interesting what could happen with just a relatively, small amount of capital relative to the potential for reward. There's a great tool called Add a Percentage Calculator. If it's confusing to you, just go in and use that tool, and it tells you, like, this is your starting amount, and then this is the percentage you want to add, and then do the math on it. It works differently than I think most people expect, right? So Add a Percentage Calculator is a pretty cool tool to utilize. Okay, so that's it. That's a bit of commentary on some of the scanners, how we use them, and then we kind of delved into some of the data for what's going on with the midterm charts, right? So midterm is when I have configurations for 1 day, 2 day, 3 day, 4 day, and so on, right? Some variation of this going into about the 1 week or the 2 week gives you a little bit of perspective. I call these the midterm charts. This is a different asset, but here is an example of a micro chart, right? Not a scalping. Scalping is the ones that move right in front of your eyes, usually all intra-hour mostly. And those, even for advanced traders, I really tend to recommend staying away from. You'll never hear me say recommend unless it's a recommendation for protecting yourself. And so anyway, with that being said, here is an example of a loose configuration for what I would call micro, where you have something like, as little as the 5 minute to maybe the 12 minute as your quadrant one. And then you have roughly the 1 hour or the 2 hour, the 90 minute as your quadrant four. Usually the 2 hour or the 3 hour is right here in quadrant six. And then usually, these last two are about the 12 hour and the 1 day. So any configuration that gives you good perspective on what's happening in every single time frame all the way up to 1 day is pretty good for that. And so, and then you can kind of see perspective from volatility cloud configurations as well. You can see which ones have remained consistent, which ones have not. In this case, Cardano has 3 supports here, and then it's got a cloud and the turquoise bar guarding the upside. So when it becomes obvious what to do, that most people don't have the patience for, is when there's a break of this turquoise. When there's a clear sustainable break of this green, generally speaking, it can confirm that we may see further downside, and you want to start looking at what channels are doing on smaller time frames, right? When you see, some larger channels as green and still bullish, but you start to see more and more uniformity. Let's just pretend this one was red for a second, and then this one really is red, and then you start to see more uniformity here, and you start to see uniformity here. When they're all red, that's kind of what it looks like to be potentially in the midst of a trend change, and you really have to kind of get that perspective. And then if you want, the goal is to ride the dominating pressure. If it's down pressure, maybe you want to look for shorts. If it happens to be bullish, up pressure, maybe that's an opportunity to look for longs. And you get to protect yourself to whatever degree you feel comfortable with stop losses that are based on the logic of pressure lines, volatility clouds, fib lines, and so forth and so on, right? Which we kind of have plotted. You get to protect yourself with the knowledge of what does pressure look like with volatility clouds, movement monitors, and breakout bars in time frames that matter to me. And can I get them to align with channels? Because if I can find trades where everything aligns, and then it also aligns in all these different time frames, which sometimes it feels like it takes a long time to get to a point where that is the case, but it's really obvious when you see it. And that's what you kind of have to look for. You have to realize that even in books like Market Wizards, 85% of trading is ranging, right? It's ranging volatility. Kind of looks like this, right? This is a great example. Theoretically, 85% of trading in all markets is ranging volatility. And we're looking to get alerted or to spot, just by viewing things on our own manually, conditions that are highly conducive to entering a long or a short, because in that 15% window of time, we're not ranging, we're trending, right? And so you want to kind of look to identify those. And I have a number of videos where it's obvious. I think one of my first videos on pressure lines, I caught a trade that had a lot of bullish confluence. I've taken plenty of screenshots, even in the Facebook group, of what bullish confluence across time frames looks like. Even in macro time frames, I shared probably in around, I want to say it was around November, what it looked like. And when you show it in the form of algos in a crypto group, I don't know that anybody really, there's only a few people that really take it seriously. But I don't think most people do. They're not willing to trust that the algos actually work. And so it's usually a delayed reaction, where later people acknowledge that it actually worked out, unless they're deeply familiar with the algos, and then they kind of have more appropriate expectations. But with that being said, hopefully that gives you some perspective on what it looks like. There are moments in time where almost all these quadrants are operating in green volatility cloud conditions, with orange movement monitors, with orange breakout bars prevalent, with green channels prevalent, right? And those are the conditions that people become fearful that they've missed the bus, And at the same time, when you have overwhelming confluence across time, you kind of know the right thing to do if you're going to do something is long. And if you're going to choose a moment in time to long at the best possible moment, it would be in those types of conditions. And then you move on to the checklist and finding an entry. So I think that just about wraps up the introduction to the checklist and conditions conducive. I think I needed to share this because people needed a baseline for how to identify setups. We needed to talk about volatility cloud relative to movement monitor, relative to channel, relative to breakout bars, all of that, right? We needed to know the confluence stack, which we talked about in the first part of this video. So I think it was very important and meaningful to go through that. And at the same time, we can now move on to the checklist. So I think I've spent about 40 minutes just on introduction. Timeframes, we talked about syncing chart symbols as well as syncing time intervals. Both of those are very powerful because you want to be able to just flip through different assets on your midterm timeframe templates and on your micro timeframe templates. You also want to be able to flip through different time frames on your scanners, right? You want to be able to have 8 different assets and you're looking at the 4 hour on all of them. And then I want to flip to the 2 hour and I want to look for any time frame that I might be able to enter a trade because I see red over blue on blue in a red channel, or I see green under orange on orange in a green channel, right? And then I can open up my micro time frame chart and sync all the symbols to that one asset that I found that had conditions conducive in the 4 hour, right? Maybe it's sand we had talked about. It's nice to be able to find it on your scanner and then take it to your micro layout or take it to your midterm layout, plop it in there. Sand populates in all the time frames that matter on the midterm layout and the micro time frame layout. And then you get to kind of go through it, right? This, again, is the example of the micro time frame layout. So that's what I'm talking about. We literally can sync the symbol, right, which we talked about right here, symbol, which is already synced in this case. And then we can literally go here and I can just change the whole chart to look at sand, because all I'm interested in right now is sand, because I spotted it on my scan chart in the 4 hour time frame. It looked spicy. It looked like something I want to be a part of. And so I go and I look at it and I check it out. So that is why that's important. And then I get to go review it on a larger time frame layout, right? I want to look at the macro conditions for sand. Okay, do the macro conditions support the trade that I'm going to make? So it's important for me to know that sand is blue movement monitor in a red volatility cloud on the 1 day time frame. It's also kind of useful for me to also have perspective that over the past long period of time, like I said, about somewhere between a half and 2/3 of a year, it's been in an upward trend. So could we easily at some point in time break through that red volatility cloud? Yes, we could. So what am I looking for? I'm looking for a move that tells me that it's intelligent to trade this short, or I'm ideally looking for a move that tells me it's intelligent to trade this long, right? To whatever degree of move I think is going to happen. And if it's going to go to the top of the channel, it'd be somewhere up here at the 75 cent range. And that's kind of nice if you happen to be able to long with even just 2x leverage from there. A lot of people would agree that is worth getting stopped out on a couple times. How do you risk mitigate? Well, by not having high leverage and by having a position size where the absolute value is not more than you can afford to lose, whatever it is, 7% of it, right? Where it's kind of negligible. But if you happen to be successful, the win doesn't really feel negligible. It feels like it actually changes the game for you, in some capacity. That's where we start measuring risk-reward ratios, right? Okay, so with that being said, I have the DIIO checklist here. So at 15 minutes in, we will now be moving on to part one of the checklist. So